Hello, good afternoon, and thank you so much for tuning in to CNBC-TV18. You're watching Your Stocks with me, Vinny Motiwala, coming from the Motilal Oswal studios. Let's take a quick look at just the market, what it's doing. Nifty, as of now, is trading with gains of 28 points, up 0.1%. So, yes, that range is where the Nifty is continuing to move in, right? Not much of an up move, down move from that, but recovered from the day's lowest point, and in that range is what the Nifty is trading at. Broader markets that continue to see an outperformance coming in. Page Industries reported their numbers. Margins seem quite strong as well, 23% versus 18.4%, and Hormuz was marking there a short while ago. But on that note, let's get started with the show. And this is a show where we solve all your stock-related queries. And to solve all of that, today we have our experts joining with us, Ruchit Jain from Motilal Oswal Financial Services, as well as Parthiv Shah of Tracom Stock Brokers to solve all your stock-related doubts. Thank you so much, gentlemen, for joining in with us as always this afternoon. And I'll start with the first query for today, and this one is coming in on Zomato. We have Sheetal Jain, who's writing to us from New Delhi. She's holding 80 shares of Zomato at a price of 120 rupees per share. Wants to know if she should continue to hold this or maybe look to exit it currently. The stock is trading at 233 rupees. She's making a good amount of profit. Parthiv, let me take it to you first. Good afternoon, and what's your view on Zomato?
Good afternoon, Vinny, and good afternoon, all our viewers. See, I think if you see what has happened to Zomato is after they talked about raising additional 8,500 crores via the QIP, I think they already had a 10,000 crore kind of watches. They probably realized the fact that the quick commerce competitive intensity is going to increase, and there could be more cash burn in order to ensure that they retain and try to grow their market share and try and also increase their gross order values. But I think this is kind of played out likely in the last quarter when we saw that the results were slightly dampener in the quick commerce space. We are also seeing a lot of other unlisted peers like Zepto who have raised a lot of funds. Swiggy raised funds through IPO, and now besides these three, I think a lot other bigger deep-pocketed players are talking about entering big time into quick commerce space. I think that is the reason why Zomato has kind of languished from its very high levels. We believe next 2-3 quarters, I think, could be a little challenging for players like Zomato. It'll be very interesting to see whether at all, they're able to mitigate the cost and whether they're going to burn further cash or not. So our sense is, I think, probably partial book your profits. You're almost more than doubling your money and leave the rest of the position for long term.
Okay, Sheetal, can partial book up profits? Maybe some bit of the competition, quick commerce side concerns, in terms of the competitive intensity. That's a factor that is also highlighted here. But, Ruchit, let me come to you. Same story, what is panning out on the charts and technicals as well. Last 1 month, 12% decline. That muted and sluggishness is what has come in for Zomato stock. What are you expecting?
Yeah, hi, very good afternoon. Well, we have seen a corrective phase in last 1 month, but if we look at some longer term charts, then this just seems to be a correction within an uptrend. One should not forget the stock had also seen a very sharp up move right from around 60 rupees in April 23 to 300 rupees without any corrective phase. So I think this is just a correction within a long term uptrend. We anticipate that we might time-wise correction at least for next 2 to 3 months, where the stock would continue to trade within the range of 200 to 260 to 70 on the higher side. So if it's a long-term view, then I would recommend to continue to hold on. And if we get any near-term dips around that 200, 195 range, that would be a good opportunity to add more positions to your portfolio.
Okay. Let's move on to the next query for today. That is on ITC. We have Rajiv Sharma, who's writing to us from Chandigarh, holding 50 shares of ITC at a price of 150 rupees per share. So really making a good amount of profit right now. 447 is what the stock is trading at. Wants to know what is the outlook on the stock going forward. Parthiv, let me take it to you first. ITC, what's the view coming in on this? Normally during those budget times, you wait out if there's any cess or duty coming in. That's not there even this time. ITC as a stock, moved on to 450 levels around that. What are we watching out for now? Should the viewer continue to hold or book out the profits?
Oh, yes, absolutely. I think the viewer should hold on to the stock, especially his cost price is so low. He locks in almost a dividend yield of 8-9%. Besides that, I think what we really liked in terms of the outcome of the budget is that the government has not really overburdened the organized sector in the cigarette space with more taxes and cesses, because I think that kind of deters and encourages a lot of illicit trade in the cigarette space. I think that is something that the markets will like, and even players like ITC will try to take a lot of advantage in terms of market share gains, and they have been a market leader for like unprecedented times. And more importantly, I think their FMCG business should also get an impetus, because we know for the fact that ITC has a more urban-centric FMCG space, FMCG business, and they are targeting more of premiumization. And thanks to the tax cuts availed in the budget, I think this will certainly benefit a lot of players like ITC. So I think two key business components doing well over the time. I think we believe at 25 times forward earnings, ITC is not very expensive. Certainly hold on for the long term.
Okay, hold on for the long term. That's the word coming in, Parthiv. And for you, Ruchit, the ITC, we should continue to hold for the long term?
Yes, I have a similar view that, price-wise also, if you see last 2.5 years, the stock has relatively done quite well. Although last 6 months, the stock has been consolidating within the range, but it has not reached any of its long-term supports yet. 420, 430 immediately is the near-term support level for the stock. Till those levels are intact, I don't think he should worry about it. And since the buy price is very low, I think he has a good margin of safety that in case if he sees some sort of corrective action too, unless it changes its long-term trend, I think he can continue to hold on to this one.
Okay, I'm just going to mark the flashes and what our ticker team is flashing right now. Rupee is trading at record low levels, so just keep an eye out on that one and where that is headed. 87.48 is what the rupee is trading at, record low. But continuing with the next query then, and let's talk about Adani Green. That's the next query what the viewer has on. And Lakshmi Rao is writing to us from Kolkata, holding 25 shares of Adani Green. Price is 2,315 rupees per share. Wants to know whether to hold, sell. What is the view coming in on this one? Parthiv, your view on Adani Green on the fundamentals?
We are upbeat on the very long-term fundamentals of this company, because currently, as we know, this company houses renewable energy capacity of around 11 gigawatts. And I think the company is given a very, very ambitious targets of touching 50 gigawatts by 2030. I think we are penciling that even if it were to come by 2032, I think that that is one of the highest capacity additions in renewable energy space by any other company in the country. And I think we have seen the past track record of this group in terms of the execution skills and how well they can execute. I think these are fantastic assets that they're creating. And I think the budget had a lot of impetus coming from the government to kind of give a huge encouragement to this space. And I think this is a company which has a lot of ecosystem in terms of backward integration as well within the other group companies. So we are upbeat on this name for very long 5-year horizon.
Okay, and your view on this, Ruchit? Adani Green, what should the viewer do? Continue to hold, look to sell? They're making a loss right now.
So technical structure is not that positive. We have seen a lot of low bottom structure in the stock, and whatever pullback moves we are witnessing in between, we are not witnessing any volume-based up moves in the stock. So unless we see any kind of volume-based up moves, I would suggest a sell and rise kind of strategy to keep in this one. Resistance for the stock is now around 1150 to 1200 range. So if we get any pullback moves in between towards that range, technical view would be to take an exit from this one.
Okay, sell on rise kind of a view. That's a word coming in from Ruchit on Adani Green. But on that note, we're going to step into a very short break. But after the break, we'll bring you our special segment. That's a growth code and initiative by Grow and CNBC-TV18. We'll address your questions on how to navigate the market and make informed trading decisions. So stay tuned in. Welcome back, and it's now time to focus on the Growth Code, a special initiative by Grow and CNBC-TV18. Whether you are new to trading or a seasoned professional, our goal is to provide you with actionable insights and strategies to navigate the market and make informed trading decisions. We still have with us Ruchit Jain of Motilal Oswal Financial Services, and we also have Vaishali Parekh, Vice President at Technical Research at Prabhudas Lilladher, joining in with us to help you solve all those doubts. Thank you so much, Vaishali, also for joining in with us on the show right now. Let's get started with the first query right now. We have Nikhilesh Das, who's writing to us from Chennai. Now, he's saying that he's recently started trading a small capital but a a small capital but finds himself taking big positions hoping for very quick gains. Now, he made some profits initially, but now he is back and facing some losses. They are wiping out his gains, and he wants to know, what should he do? What should he decide the right position in terms of the size to avoid blowing up his account? Vaishali, good afternoon. Let me take this to you first.
Hi, very good afternoon, Ravi, and thanks. Yeah, so I mean, this is a myth, actually. I feel everyone thinks that, it's very easy to have quick money and over leverage your position, but that is not so. I think the ideal way is to definitely look for good quality stocks and buy at an appropriate level, because that is what is going to make wealth. But if trading is your preference, then one should have disciplined trading with all the rules. And it's always a known thing that, yes, only put in your money to what you can. It is no point, because when you are over leveraging your positions, in stress, you will not make a right decision, and you may sometimes even make wrong ones. So I guess disciplined trading is a must.
Okay, your view is disciplined trading is a must. Ruchit, what would you advise the viewer to do at such a time?
So I think this is a very common mistake amongst traders, especially the traders who don't have much experience. That when they get some 2 or 3 trades where they make money, then they tend to invest big sum of money in their next trade. But all trades will not work out. So I think focusing on money management is key to accumulate wealth over long term, even in trading. So avoid taking any big positions on any single trade, and rather keep a fixed stop loss on each and every trade. So you should adjust your quantity accordingly, so that you do not lose out much in any single trade. So that would be my advice, to focus more on money management, and that should work quite well for him.
Okay, focus on money management also is an advice coming in. Let's move on to the next query. We have Mithila Jain, who's writing to us from Jaipur. Now, she says that she has heard about 2% rule for risk management, but doesn't know how it applies to her trading. She wants to know if this rule will limit her profit potential, and also wants to know how to balance the risk management along with maximizing gains. Ruchit, let me take this to you first.
So yes, 2% risk management says that whatever entire trading capital you have, on each and every trade, you should not lose more than 2% of that entire capital. So your stop loss is 2% of the capital that you're holding. So what would happen that keeping this 2% stop loss will limit your losses and not only gains. So look at from that perspective, that in case if the positions go wrong against you, then you would not have any bigger losses if your losses are limited over there. What you can do is during the trended phases, for example, when the markets is in an uptrend, and if you are going long or riding the trend, the stop loss, you can keep it limit to 2%, but not necessarily you would book profits in 2 or 3%. So if you are in a trended phase, then keep trailing stop loss method. So that will help you out to limit your losses. And at the same time, you would have a good balance between the risk management, and you can maximize your gains over there.
And Vaishali, your view on this as well, what would you advise the viewer?
So 2%, of course. Now, this is subject to your the time period that you're following. So if it is for a shorter term, and if 2% is what you have decided, then first of all, you look for the trade whereby your risk reward is ratio is favorable. It's not wise to choose a trade whereby you get 2% gain and 2% stop loss. So making an entry at an appropriate level whereby 2% is affordable, that should be the trade which one should focus on, and then right through the rally till you get a reversal. So that is how you will be able to maximize your profit and have a disciplined trade.
Okay, let's move on to the next query. We have Mohan Kumar, who's writing to us from Kerala. He says that he trades on leverage to increase his profits, but he has had some losses that were much bigger than what he had expected. Now, he asks that how does leverage actually impact the position in sizing, and how can he avoid taking too much risk on this? Ruchit, your view?
So leverage does have an advantage that you can make a larger percentage of money on your invested capital, but at the same time it comes with that higher risk as well, where in case if the trade goes against you, then your losses could also be big. So I would suggest that avoid too much leverage on any single particular position, and do not hesitate to miss out the trades where the losses could be big. So that again, that here the risk management comes into the picture. That if you think that the stop losses are too big from your buying price of any particular trade, so do not hesitate to miss out such trades and rather focus on only those trades where the losses would be limited.
Okay, and let's move on. And Vaishali, your view on this?
So I would say, first of all, leverage stocks. I mean, when you're leveraging your stocks, it works well only in a trending market. But the trader has to be very quick when he or she tries to see that, yes, there is some reversal. I think there should be no hesitation in exiting the stock, because once you get into that trap, then it is going to be an endless saga of going through losses. So if it is a leverage, over leverage, or you're taking a MTF or money from outside, I think it works very well in the trend. So you should know your trend. And if there is any adverse movement going on, please exit. So that is the way to do it.
Okay, let's move on to the next query. We have Arundhati Iyer, who's writing to us from Bangalore. She says that sometimes she's adding to her loss-making trades only in the hope that actually one would start recovering later. She's asking if she should cut her losses sooner, and what is the best strategy to manage capital in a speculative trading. Vaishali, what's your view on this one?
Again, I think for such trades, I think full knowledge is really essential. So I guess if she's interested in doing this kind of trading, technical analysis is the way to go, because that is the only way where you will be able to follow your disciplined trading, making your own strategies, because random thinking of entry and exit will never help.
Okay, and your view on this one, Ruchit? What should Arundhati be doing?
That's very difficult to find out that which stocks you should average and which stocks you should not. So typically one way of to find out that is when the stock is correcting, you should see whether the stock is in a downtrend or that correction is just a corrective phase within an uptrend. So look to average out stocks only when you find out such stocks are correcting within an uptrend, and avoid averaging stocks when they are in a downtrend. So there is in technical analysis Dow theory which you can follow, which would help you to find out the trends. And if the stock is in a downtrend, then definitely you should avoid averaging such names.
Okay, let's move on to the next query then. We have Rajat Arora, who's writing to us from New Delhi. He's saying that he trades a mix of speculative and relatively safe stocks, but doesn't have a clear strategy actually for allocating his capital between them. Now, he wants to know if there is a recommended way to divide his portfolio to balance the risk and reward. Vaishali?
So I would say first, your main prime focus should be on investments, and the balance, I would say 60% of investment, 20 to 25% of positional trading, and 20% of aggressive trading. So that is how I would say, because at least that way you can afford to make these trades, because if you're putting your full chunk of money in trading, I don't think there will be anything left if you don't follow any strategies. So I would say that yes, first get into investment, and once you start making money, then start taking risks.
Okay, and your view on this, Ruchit, what should the viewer be doing?
So I think when it comes to allocating between the relative safer stocks and the riskier stocks, you can use that 60-40 rule, where 60% of your capital goes to safer stocks which are not very high beta, and 40% of your capital goes to a bit high beta stocks. But of course, money management should be done in that too. But in the bull markets, you can lean to be more speculative when we are in a trended phase. And when the markets are in a corrective phase, I think you should shift more towards the safer holdings.
Okay, that's the view coming in from Ruchit also on the query. But, that was the last query for today. So thank you so much, Vaishali, as well as Ruchit, for joining in with us on the show and helping solve all our viewer-related doubts. But that's all the time we have on this edition of Your Stocks on CNBC-TV18. Remember, you can always write to us on the email address that is flashing on the screens. And remember, experts will take these queries and solve all your doubts. But with that, we're out of time. Thank you so much for tuning in. Closing bell up next to take you through the last hour of trade.